The moment you open your trading app, something shifts inside your mind. Your heartbeat quickens slightly, your focus narrows, and suddenly every green candle feels like validation, every red one like personal judgment. You tell yourself you're being rational, analytical, strategic. But deep beneath the surface, ancient psychological forces are already steering your decisions toward the same fate that claims 9 out of 10 traders who enter this arena. You see, the market isn't just a place where assets are bought and sold. It's a mirror that reflects back every flaw in human psychology, every cognitive shortcut we've evolved to survive in a world that no longer exists. And until you understand what's happening in your own mind, you'll keep making the same mistakes that have destroyed trading accounts for generations. Most traders think their problem is technical. They believe they need better indicators, faster signals, more sophisticated strategies. They spend months learning chart patterns and market analysis, convinced that knowledge alone will save them. But here's the uncomfortable truth. The statistics haven't changed in decades. Roughly 90% of traders still lose money, despite having access to more information, better tools, and clearer educational resources than any generation before them. The failure isn't in their charts, it's in their minds. Today, we're going to explore the hidden psychological patterns that trap intelligent people in cycles of loss. We're going to examine why your brain, despite its best intentions, actively sabotages your trading success. And more importantly, we're going to uncover the mental rewiring that separates the 10% who thrive from the 90% who struggle. This isn't about quick fixes or trading tricks. This is about understanding the deep psychological architecture that determines whether you'll join the majority who quit frustrated or the minority who build lasting wealth through patient discipline. Let's begin with the most seductive trap of all. When you first discovered trading, you probably felt a rush of possibility. Maybe you saw someone online posting screenshots of massive gains. Maybe you read about legendary traders who turned small accounts into fortunes. The dream crystallized immediately. Financial freedom, working from anywhere, being your own boss, proving your intelligence in the most competitive arena on earth. That dream isn't wrong, but the timeline you attached to it probably was. Most new traders approach the market like a lottery ticket disguised as a skill game. They expect rapid results because everything else in their digital world provides instant gratification. Social media gives instant likes. Streaming gives instant entertainment. Even online learning provides rapid feedback. So naturally, they assume trading should work the same way. This expectation creates what I call the illusion of speed. You start believing that wealth creation should be fast, that profits should be consistent, that success should feel obvious and immediate. When reality doesn't match this expectation, frustration builds. And frustration in trading is like blood in the water. It attracts every predatory impulse the market can throw at you. The illusion of speed manifests in countless ways. You check your positions obsessively, refreshing your app every few minutes to see if you're winning or losing. You enter trades based on fear of missing out rather than genuine opportunity. You increase your position sizes after wins, convinced that momentum will carry you forward. You chase price movements that have already happened, hoping to catch the tail end of someone else's success. Each of these behaviors feels rational in the moment. Your mind generates compelling stories to justify them, but they're all symptoms of the same underlying disease, the belief that trading success should come quickly and that speed is somehow a measure of skill. Here's what most traders never realize until it's too late. The market rewards the opposite of speed. It rewards patience, discipline, and the ability to wait without anxiety. It punishes urgency, impulsiveness, and the need for immediate validation. Every time you act from a place of hurry, you're essentially gambling with odds that favor the house. Think about the most successful people in any field. They didn't achieve mastery overnight. They developed their skills gradually, methodically, often invisibly for years before their results became obvious to the outside world. Trading is no different. The difference is that in trading, your learning curve is measured in money, and money has emotional weight that makes patience exponentially harder to maintain. The traders who eventually break through understand something profound. True wealth in trading isn't built through spectacular wins. It's built through the disciplined management of risk over thousands of decisions. It's built by someone who can sit in front of opportunity and choose not to act because the setup isn't perfect. It's built by someone who can take a loss, and immediately begin preparing for the next trade without emotional residue clouding their judgment. This understanding requires a complete mental shift. Instead of asking, "How can I make money fast?" you start asking, "How can I protect my capital while positioning for long-term growth?" Instead of celebrating big wins, you start celebrating disciplined execution regardless of outcome. Instead of measuring success by daily profits, you start measuring it by adherence to your process. But this shift doesn't happen naturally. Your brain is wired to seek immediate rewards and avoid immediate pain. It's wired to see patterns where none exist and to feel confident when confidence is dangerous. These evolutionary adaptations helped your ancestors survive in physical environments, but they actively work against you in financial markets. The market exploits these psychological vulnerabilities with ruthless efficiency. It tempts you with small wins to build false confidence. It punishes you with sudden losses to trigger emotional reactions. It presents you with endless opportunities to second-guess yourself, to chase what you missed, to risk more than you should because you're sure this time will be different. And here's the cruelest irony. The more intelligent you are, the more susceptible you become to certain psychological traps. Smart people are often the worst traders initially because they believe their intelligence should translate directly to market success. They analyze endlessly, but they analyze the wrong things. They focus on predicting price movements instead of managing their own psychological responses to uncertainty. Intelligence becomes a liability when it breeds overconfidence. When it makes you believe you can outsmart a system that has humbled Nobel Prize winners and billionaires. When it prevents you from accepting that trading success has more to do with emotional regulation than intellectual superiority. The breakthrough comes when you stop trying to be right and start trying to be consistent. When you stop trying to predict the market and start trying to manage yourself. When you realize that your biggest edge isn't your ability to analyze charts, but your ability to remain calm under pressure, patient during uncertainty, and disciplined when every instinct screams at you to act. This realization leads to what I call the compounding mindset. It's the understanding that small, consistent improvements in your psychological approach to trading will compound over time into massive advantages. Just like money compounds through reinvestment, mental discipline compounds through repetition. Most traders never develop this mindset because they quit before the compounding has time to work. They experience a few bad trades, assume they're not cut out for trading, and walk away just before their learning curve was about to accelerate. They mistake temporary setbacks for permanent limitations, not understanding that struggle is an essential part of the development process. The traders who succeed are not necessarily more talented or more intelligent. They're more persistent. They're willing to endure longer periods of uncertainty and discomfort in exchange for the possibility of long-term mastery. They understand that trading is ultimately a game of survival, and that surviving long enough to learn is more important than any individual win or loss. But survival isn't passive. It requires active management of your psychological state. It requires building systems that protect you from your own worst instincts. It requires developing the kind of self-awareness that allows you to recognize when emotions are driving your decisions and the discipline to step back until clarity returns. This is where most traders encounter their first real test. Not in the complexity of the charts or the volatility of the markets, but in the mirror of their own expectations. The market becomes a psychological battleground where your deepest assumptions about success, failure, and self-worth are challenged with every position you take. You enter your first trade with confidence. Maybe you've studied for weeks, analyzed countless charts, watched dozens of tutorials. The setup looks perfect. The entry is clean. For a moment, everything aligns with your expectations. The price moves in your favor, and you feel that intoxicating rush of being right. This is it, you think. This is how wealth is built. Then something shifts. The price stalls, reverses, and suddenly you're watching your carefully planned trade move against you. Your stomach tightens. Your breathing changes. That confidence transforms into anxiety, then into something darker. The desperate need to be right at any cost. This moment right here is where 90% of traders begin their descent into the psychological traps that will define their entire relationship with the market. They don't realize it yet, but they're no longer trading the market. They're trading their emotions. And emotions, as any experienced trader will tell you, are the most expensive commodity you can trade with. The need to be right becomes an addiction more powerful than any substance. It hijacks your decision-making process and transforms rational analysis into wishful thinking. You start seeing what you want to see instead of what's actually happening. You hold losing positions longer than your plan dictates, convinced that the market will eventually validate your original thesis. You add to losing trades, doubling down on failure in the hopes of turning it into success. This isn't weakness. This is human nature running headfirst into a system designed to exploit exactly these tendencies. The market doesn't care about your ego, your need for validation, or your desire to be proven right. It moves according to forces far larger and more complex than any individual trader's opinion. But your brain, evolved for a different kind of survival, interprets every loss as a personal attack, every win as confirmation of your superior intelligence. The psychological weight of money amplifies every decision. When you're trading with funds you need, funds that represent months of work or years of savings, each fluctuation carries emotional significance that has nothing to do with the actual trade setup. A $50 loss becomes a judgment on your competence. A $100 win becomes proof that you've figured something out that others haven't. But here's what separates the traders who eventually succeed from those who burn out. The successful ones learn to divorce their self-worth from their trading results. They understand that the market is not a reflection of their intelligence, their character, or their value as a human being. It's simply a mechanism for transferring wealth from the impatient to the patient, from the emotional to the disciplined, from those who need to be right to those who need to be profitable. This realization doesn't come easily. It often emerges from pain, from the humbling experience of watching carefully laid plans crumble in real time. Most traders experience this as failure and use it as evidence that they're not cut out for this game. But a small percentage see it differently. They recognize that the market has just given them the most valuable lesson they could receive, that success in trading has very little to do with being right about individual trades and everything to do with being right about the process. The process is where the real work happens. It's unglamorous, repetitive, and often boring. It involves setting clear rules for entry and exit, defining risk parameters before emotions get involved, and most importantly, following these rules regardless of how you feel in the moment. The process demands that you treat winning and losing trades with equal emotional weight, which goes against every instinct your brain has developed over millions of years of evolution. Your ancestors survived by celebrating victories and learning quickly from defeats. But in trading, celebrating victories can lead to overconfidence, and devastating defeats can lead to revenge trading. Both emotional extremes are dangerous. The market rewards emotional neutrality, the ability to execute your plan with the same level of focus and discipline whether you're winning or losing. This emotional neutrality isn't natural. It's a skill that must be developed through repetition and conscious effort. Every trade becomes an opportunity to practice this skill. Every win becomes a chance to remain humble. Every loss becomes a chance to remain composed. Over time, this practice builds what I call emotional muscle memory, the ability to respond to market volatility with trained calm rather than instinctive reaction. But developing this skill requires more than just willpower. It requires a fundamental shift in how you define success. Instead of measuring success by profits and losses, you start measuring it by adherence to your process. Did you follow your rules? Did you manage your risk appropriately? Did you exit when your plan said to exit, regardless of whether the trade was winning or losing? These process-based metrics become more important than outcome-based metrics, because they're the only factors you can actually control. The market will do what the market does. Prices will move based on countless variables you'll never fully understand or predict. But your response to those movements is entirely within your control. This is both liberating and terrifying. Liberating because it means your success isn't dependent on factors outside your influence. Terrifying because it means you can't blame external circumstances when things go wrong. Most traders never make this transition. They remain focused on outcomes, on being right about market direction, on proving their analytical skills to themselves and others. They treat each trade like a test of their intelligence rather than a simple business transaction. This perspective keeps them trapped in emotional cycles that make consistent profitability nearly impossible. The traders who break through understand that trading is not about being smart. It's about being consistent. It's not about predicting the future. It's about responding appropriately to whatever the present moment offers. It's not about never being wrong. It's about being wrong quickly and cheaply, then moving on to the next opportunity without emotional baggage. This shift in perspective changes everything. Suddenly, losing trades become as valuable as winning trades because they're both providing information about the effectiveness of your process. A loss that follows your rules perfectly is a success. A win that violates your risk management is a failure, even if it makes money. This inversion of traditional thinking is what allows successful traders to remain profitable over long periods, while others cycle through boom and bust patterns that eventually destroy their accounts. The market tests this understanding relentlessly. It will give you wins when you break your rules, tempting you to abandon discipline. It will give you losses when you follow your plan perfectly, testing your commitment to the process. These tests never end. Every day you trade, you're choosing between short-term emotional satisfaction and long-term sustainable success. The choice seems obvious when you're calm and analytical. It becomes incredibly difficult when money's on the line and emotions are running high. This is why successful trading is ultimately about character development. The skills required to trade profitably, patience, discipline, emotional regulation, objective self-assessment, are the same skills required to succeed in any challenging endeavor. Trading doesn't just build wealth, it builds the kind of person capable of building and maintaining wealth in any environment. But character development takes time. It can't be rushed or shortcutted. The market provides constant feedback on your psychological development, and that feedback is measured in dollars and cents. Every mistake costs money, every improvement saves money. This direct connection between psychology and profit makes trading one of the most intense personal development experiences available. Most people aren't prepared for this intensity. They expect trading to be about charts and numbers, not about confronting their deepest fears and limitations. They don't realize that every trade is asking them fundamental questions about their relationship with money, risk, uncertainty, and themselves. Am I patient enough to wait for the right opportunity? Am I disciplined enough to follow my plan when emotions are screaming at me to do something else? Am I humble enough to accept that I can't control outcomes, only my response to outcomes? These questions don't have easy answers, and the market doesn't give you time to figure them out at your leisure. It demands immediate responses under pressure, and those responses reveal your true character more clearly than any personality test or self-assessment ever could. This is why trading is often described as the most expensive therapy available. It forces you to confront aspects of yourself you might prefer to ignore, and it charges you for every lesson along the way. But for those willing to do the inner work, trading offers something unique. The opportunity to build wealth while building character simultaneously. Every moment of patience rewarded by the market strengthens your ability to be patient in other areas of life. Every act of discipline under pressure builds discipline you can apply anywhere. Every time you remain calm during volatility, you're developing emotional resilience that serves you far beyond the trading screen. This is the hidden curriculum of trading. Behind the charts and indicators and strategies lies a course in personal mastery that most traders never recognize. They're so focused on the technical aspects that they miss the psychological transformation happening beneath the surface. They don't realize that becoming a consistently profitable trader requires becoming a fundamentally different person than the one who first opened a trading account. The transformation isn't visible at first. It happens in quiet moments when nobody's watching, when you close a losing trade according to your plan instead of holding it out of hope, when you sit through an entire trading session without placing a single order because nothing meets your criteria, when you feel that familiar surge of greed or fear and choose discipline instead. These small victories don't show up on your profit and loss statement immediately, but they're building something far more valuable than any individual trade could provide. They're building the psychological foundation that separates those who survive from those who eventually surrender to the market's relentless pressure. Most traders never understand this invisible work. They measure themselves only by visible results, by green numbers and account balances. They don't realize that the real battle is happening in spaces that can't be quantified or displayed on a screen. It's happening in the moment between impulse and action, in the gap between feeling and decision, in the choice between what feels good now and what serves you best over time. This is where the minority begins to separate from the majority. While most traders are focused on finding the perfect strategy or the most accurate indicator, the successful few are focused on perfecting themselves. They understand that the market isn't a puzzle to be solved but a mirror to be faced. Every reaction it provokes, every emotion it triggers, every fear it surfaces is information about areas where growth is still needed. The market has an almost supernatural ability to find your psychological weak points and exploit them. It will present you with exactly the scenarios that challenge your greatest areas of immaturity. If you struggle with patience, it will offer you premature opportunities that test your ability to wait. If you battle with greed, it will show you profits that could be bigger if you just risk a little more. If fear controls you, it will create uncertainty that forces you to choose between paralysis and courage. These tests never end, they simply evolve as you do. The market that challenged you as a beginner will challenge you differently as you develop. It will find new ways to probe your psychological defenses, new methods to test your commitment to your principles. This isn't cruelty. It's simply the nature of a system that rewards only those who have developed genuine mastery over themselves. The traders who thrive learn to welcome these tests. They recognize that each challenge is an opportunity to strengthen their psychological muscles. When the market pushes against their discipline, they push back with structure. When it tempts them with easy profits, they respond with calculated risk. When it threatens them with losses, they answer with acceptance and preparation. This relationship with adversity is perhaps the most crucial shift that successful traders make. Instead of viewing difficult market conditions as obstacles to overcome, they see them as training grounds for development. Instead of hoping for easy conditions that make trading simple, they understand that easy conditions often produce lazy habits that become dangerous when volatility returns. The market teaches through experience what no book or course could ever convey. It shows you the difference between intellectual understanding and visceral knowledge. You might read about risk management and think you understand it completely, but until you felt the physical sensation of watching a position move against you while you stick to your predetermined exit plan, you haven't truly learned what risk management means. This experiential learning is both the blessing and the curse of trading. The lessons are vivid, immediate, and unforgettable. But they're also expensive, emotionally taxing, and often painful. The market doesn't offer gentle corrections or supportive feedback. It speaks in the language of profit and loss, and that language can be harsh to those who aren't prepared for its directness. Most traders interpret this harshness as evidence that they're not suited for trading. They experience a series of losses and conclude that the market is unfair, manipulated, or impossible to understand. They don't realize that the losses are often the most valuable part of their education. Each loss that follows proper risk management is teaching them that they can survive setbacks. Each loss that violates their rules is showing them the cost of emotional decision-making. The successful minority learns to read these lessons differently. They see losses as tuition paid for market education. They understand that every trader, regardless of eventual success, must pay this tuition. The only choice is whether you pay it consciously, with proper risk management and emotional control, or unconsciously through reckless decisions and emotional trading. This perspective transforms the entire trading experience. Losses stop feeling like failures and start feeling like investments in your development. Wins stop feeling like validation of your intelligence and start feeling like natural results of disciplined execution. The emotional rollercoaster that destroys most traders becomes a steady, methodical process of continuous improvement. But this transformation requires something most people struggle to provide: honest self-assessment. The market will show you exactly who you are, but only if you're willing to look. Most traders prefer the comfort of self-deception. They blame external factors for their losses and credit their intelligence for their wins. They see patterns that confirm their biases and ignore data that challenges their assumptions. The successful few develop what I call brutal honesty with themselves. They review their trades not to feel good or bad about their performance, but to extract every possible lesson from each decision. They ask themselves uncomfortable questions. Did I follow my rules? Was this decision driven by emotion or analysis? What can I learn from this outcome regardless of whether it was profitable? This self-examination isn't always pleasant. It often reveals habits, biases, and emotional patterns that are difficult to acknowledge. But it's also liberating. Once you can see your psychological patterns clearly, you can begin to change them. Once you understand your emotional triggers, you can prepare for them. Once you recognize your weaknesses, you can build systems to protect yourself from them. The market rewards this kind of self-awareness more than any technical skill. A trader who knows their limitations and trades within them will always outperform a trader with superior analytical abilities but poor self-control. The market doesn't care how smart you are. It cares how disciplined you are. It doesn't reward complex strategies. It rewards simple strategies executed consistently. This is why the most successful traders often use relatively simple approaches. They understand that complexity is often the enemy of consistency. The more variables you introduce into your trading, the more opportunities you create for emotional interference. The more decisions you have to make in real time, the more chances you have to let fear or greed influence your choices. Simplicity in trading isn't about using basic tools or elementary analysis. It's about creating systems that minimize the number of emotional decisions you need to make under pressure. It's about automating as much of the process as possible so that when emotions run high, structure keeps you on track. It's about building habits that function, regardless of how you feel in any given moment. The most successful traders I've studied share this commitment to systematic thinking. They don't rely on inspiration, motivation, or feeling confident to trade well. They rely on processes that work even when they're tired, stressed, or emotionally compromised. They understand that trading is a business, and successful businesses run on systems, not on the emotional state of their operators. This systematic approach extends beyond just entry and exit rules. It encompasses everything from how they prepare for each trading session to how they handle profits and losses. They have routines for managing their psychological state, protocols for dealing with unexpected market events, and procedures for continuously improving their performance. Most traders underestimate the importance of this systematic approach because it's not exciting. There's nothing glamorous about following the same routine every day, executing the same risk management protocols, or maintaining the same emotional discipline regardless of market conditions. But this unglamorous consistency is what builds lasting success in trading. The market tests your commitment to these systems constantly. It will give you profits when you break your rules, tempting you to abandon discipline. It will give you losses when you follow your plan perfectly, testing your faith in the process. It will present you with opportunities that seem too good to pass up but don't fit your criteria. These tests are designed to separate those who are committed to long-term success from those who are seeking short-term satisfaction. Your response to these tests determines your trajectory as a trader. Each time you choose process over outcome, discipline over emotion, long-term thinking over short-term gratification, you're building the psychological capital that compounds into consistent profitability. Each time you choose the opposite, you're reinforcing patterns that will eventually destroy your account. The path from 90% to 10% isn't traveled by learning new strategies or discovering hidden indicators. It's traveled by becoming someone different than who you were when you first opened that trading account. The market doesn't transform your bank balance until it first transforms your character. Every successful trader started exactly where you are now. They felt the same frustration, the same impatience, the same desperate need to prove themselves. They made the same mistakes, experienced the same losses, wrestled with the same psychological demons. The only difference is they chose to see these experiences as education rather than evidence of inadequacy. This transformation doesn't happen overnight. It unfolds slowly, quietly, through thousands of small decisions to choose discipline over impulse, process over outcome, patience over speed. Each time you resist the urge to overtrade, each time you cut a loss according to plan, each time you wait for your perfect setup instead of forcing mediocre ones, you're rewiring the very patterns that keep most traders trapped in cycles of boom and bust. The market will continue testing you. It will continue finding new ways to challenge your commitment to these principles. But now you understand something that most never learn. These tests aren't obstacles to overcome. They're opportunities to strengthen the psychological muscles that compound into lasting success. Trading isn't just about building wealth. It's about building the kind of person capable of creating and maintaining wealth in any environment. The patience you develop waiting for perfect setup serves you in every area of life. The discipline you build following your rules under pressure becomes discipline you can apply anywhere. The emotional regulation you master during volatility becomes resilience you can draw upon in any challenge. If this perspective has shifted how you see trading, if you're ready to focus more on who you become than what you make, then subscribe for more insights into the psychology of sustainable success. And in the comments below, tell me what's been your biggest mindset shift so far. The journey from the 90% to the 10% begins with a single choice: to prioritize character over profits. Make that choice today.